welcome to the final step in the closing process for the accounting cycle for any particular period. In this video, we're going to look at the closing entries. The purpose of the closing entries is to close the temporary accounts to retained earnings. If we used a temporary dividend account, we would also close it to retained earnings. We didn't pay any dividends in this example, so we won't have any, but if we did, they would also occur in the closing entries. And that's the purpose of the closing entries. The purpose of the closing entries is to return the accounts to the temporary accounts to zero so we can start adding up the revenues and expenses for the new period. Okay, and so I would encourage you to go ahead and prepare the closing entries at this time and then come back and make sure you did it right. Little hint, it's not going to take you very long. Nice, we'll see you in a second. Or in a minute, more realistically. All right, welcome back. I hope this is what your closing entries look like. I have a debit to the two revenue accounts to zero them out, and a credit to retained earnings. And I have a credit to all the expense accounts to zero them out, and the offsetting debit is retained earnings. Okay. And remember that these are indeed recorded in the general journal and posted to the general ledger, which we'll do right now. So I will keep the equity ledger page handy, as well as the revenue and expense account ledger page handy. And in the first closing entry, we debited sales revenue for $2,500. And that brings the balance to zero at 2/1/20, and we're ready to start adding up our hopefully many revenues in the next period. Same thing with rent revenue. Debit it for $300 in closing entry 1 on 1/31/20. And now it'll have a zero balance at 2/1/20, and we will again earn $300 next month. The offset is to retained earnings. And after we do that, we'll report a retained earnings balance of $2,800. On the 1/31 balance sheet. And that is we have posted the entries to the General Journal, at least the revenue side. Let's also post the revenue side to the accounting worksheet. And that brings us to the second part of the second closing entry at the end of January related to the expenses. So I will get my general ledger balances for the expenses handy. I'm going to post all this. We have the cost of goods sold being credited for $1,000 in closing entry 2 at $131.20. And that brings the balance in the cost of goods sold to 0 on 2/1/20 as we start to add up net income next period. The next thing in that entry was the interest expense. And so once I have posted that $500 credit in the closing entry to the interest expense account, it returned the balance at the beginning of February to 0, and we will once again incur $500 next period. The next component of our closing entry was depreciation expense. That's over here. Let me credit it for $100. And it returns that balance in depreciation, and we will probably accrue at least $100 more, assuming we don't buy any more fixed assets next period. The next line in our closing entry was the rent expense up here. Credit it for $1,000. And we now have returned it to 0 at 2/1/20. And we're ready to start adding up rent expense in the next period. All right. So I can now check off the posting of these 4. And income tax expense is our last closing entry. That brings the 2/1/20 balance and income tax expense to 0. So we now have posted this. And the last thing we need to do is post the expenses to retained earnings, and we'll do so right now. And as you can see, I did a silly move there when I put $2,800 down there. because that balance will actually be just 140. And I'll bet, I apologize, because I'll bet you were smarter than me there, and you didn't make that mistake, and I was driving you crazy. So I apologize for that, but you were right. It's 140. Good job. All right, let's also post that entry to the accounting worksheet. We have a debit to retained earnings of $26.60. A credit to cost of goods sold for $1,000. A credit to interest expense for $500. A credit to depreciation expense of $100. Rent expense of $1,000. And income tax expense of $660. And if you add up these columns, you have $26.60, $51.60, $54.60, and on the credit side, you have $3,800, $4,300, $4,400, $5,400. I don't believe I did that correctly. Yep, $5,460. Sorry. 38. Yep, $5,460. And that has now effectively zeroed out all of these temporary accounts. So we won't need to put anything in the post-closing over here. So in the post-closing trial balance, and indeed, we're just going to add these across, but they're also going to agree with the general ledger balances. Let's just show one of them. Here's the general ledger cash account, and indeed, it's going to be $132,600, $1,500, $9,000 for bicycle inventory, $11,000, $12,000 for the equipment, $100 for accumulated depreciation, $2,000, $3,300 for unearned rent, $500 for interest payable, banknote payable $60,000, income taxes payable $60,000. The common stock has a balance of $100,000, and retained earnings now has a balance of $140,000, and that's where it'll start next period. And then when we have new revenues, new expenses, we hopefully will add to that amount. And that's the closing of those balances. And if you add up those columns, you're going to get a balance of $166,100. And that is our accounting worksheet. All right, congratulations, you are through an accounting cycle. This is something that is fundamental. The whole set of this module analyzing the transactions, recording of the general journal, posting to the general ledger, preparing an unadjusted trial balance, preparing the adjusting entries, preparing an adjusted trial balance, setting up the financial statement column so that we can prepare financial statements, doing the closing entries, and then a post-closing trial balance. And of course, by virtue of posting the closing entries, we readied the temporary accounts for the next period. I should have mentioned, of course, we also post those adjusting journal entries, record them to the ledger and post them to the journal. And that's the accounting cycle. We're going to you work hard on this module and have this completely mastered. We've done a small company for 1 month, but this might as well have been General Electric. It's the same process. Congratulations. If you master this, you already have a skill that could earn you tens of thousands of dollars a year. And this is just the fundamental foundation of what we're going to study over the next couple of years with y'all. In the next 2 chapters, we are going to learn how to prepare those financial statements in proper form from the data in these columns. I look forward to seeing you there. Have a wonderful day.